680. That could extend towards $7, of course. But if we do break below today's low of 651, if the full 50% retracement from 706 down to the lows, which is still above us here at 768 or 678, which didn't really test yet. If we go up to the area and we roll back over, or we just fail to hold 660 and retrace down to 651, there's of course open gaps below us at 628 and 584 that could risk filling. But the next supportive area on the chart would be down around at 620 to 630 area below us. So, okay, support in my opinion has held. We broke upward slope or downward sloping trend lines for the short-term trend lower. This is the first 50 back and potentially 2 steps forward and 1 step back of a new uptrend beginning. If this uptrend doesn't remain intact, we'll see the market fail out, break through lows, but that gives us levels to manage risk with, which is the definition of a trade plan, right? Manage risk with where you invalidate such setups. You have targets and projections where you want to take profit, and of course entry points gives you a more well-rounded trade plan. So we'll see. Open gap above us around 730. I'd love to see the market trade both, if not both of these sides. But by the time December corn goes off the board, I feel like the market will be setting up into its next cyclical trend, something that it did this time last year. January soybeans 1457, actually one of the better closes out of our row crops, because we were able to close up at or near and above multi-day highs there, and above all of our moving averages. The 200-day down around 1447, and the cluster of 18-day, 100, and 55-day moving averages between 1413 and 1428 now that have been supportive over the last 2-week period in this range that we've carved out between 1420 and 1450. Back above 1450 is a little bit of a trend line. There might be a downward sloping trend line, that we're trying to break out of against the highs since last July. If that's the case, next level, the upside is $15, and above that, open gap fill around 1540 that we'll take a look at here in a second on that 4-hour chart of the January soybean. Intraday, I like to kind of consider this a range, maybe an expanding type of flat, or could be the beginning of some kind of triangle or sideways structure. What I do know is that it's about halfway through the range of the entire consolidation that we've seen since July. So we're right in the middle of that range. We are putting pressure on resistance, and I am eagerly awaiting for soybeans to maybe break out here, because it was by this time last year we had found a harvest low and the next cycle higher had begun. I can't discount the idea that we could see a pullback, test of support around 1414 for the month, as well as down to 1380, and that open gap at 1354, upward sloping trend lines in that cluster of supportive price that we saw from August through September, the range that we're in. We could see a retest of that area. And if we did, again, I would be using that as positionally trying to set up call spreads and things through next year. But right now, I'm eagerly awaiting or gearing up for more aggressive futures trading on a breakout above these levels, right? So I think we're getting near to that. We'll be talking a lot more about how these things turn out into this Friday's or Thursday's Strategy of the Week update, where I, of course, encourage you to sign up and join to be a part of that webinar. If you can't attend it, I do send out a recording of it, and you can be a part of that mailing list in the information section of this video. All right, and last but not least here today, Chicago wheat closed the day up 9.25 cents. Maybe not the most impressive in terms of the finish on where we did, close the day, but certainly was one of the more impressive moves off of our lows of the day. Failed to really get a move below $8 there. We started to move off of it. News came out. We went through highs of the day. Ran up to test the 18-day moving average around 840, the 55-day there at 844. Don't love seeing the 100-day, and the 18-day there clustered together as resistance right now. We are in a bit of a downtrend. You can kind of be following this channel. I think back above the highs of today certainly calls into a test of the 55-day moving average, but the 55 has not really been a level that's been used as a technical support and resistance. It's been more of a reversion to the mean moving average, okay? The 200-day up at 930, and of course the old highs from the summer at 950 and the prior high here from October at 950 are certainly the big resistance to chew through to start, in my opinion, the next true bull cycle to new contract highs, what have you. So we need to get through that level to really accelerate. There's a downward sloping trend line in a channel that we're following lower. I think that we could at least be due for a move back up towards that 55-day moving average at 860, maybe a test towards 880, and stops can, theoretically be below so long as we're above $8. We could see a move higher towards, a test towards $889, and if you catch a runner, it really takes off. Now again, today we go through today's lows. We're taking and calling into question the lows here from the summer, and there isn't really much that would, in my opinion, stop wheat at that point before we're talking like the $6 figure or really getting back to some old levels on the chart. Okay. On the 4-hour chart, wheat has been breaking below the 61.8 line of a 50% retracement from 740 up to highs. The full 50% retracement, the counter trend to that off the high, did kind of gap up and trade there last week or 2 weeks ago. We've then sold off down to basically a 790 target. Next in the series here, didn't quite get there today, which is why I think maybe there's going to be a little bit more of a push towards that 850 to 860 area in the near term, and maybe even a test of trendline resistance up around 880. But I think we're in a bit of a channel that if the consolidation ends and we reverse higher here, there's a good reason to maybe go with that momentum above 860 or 880 for wheat. And of course, we could still be capped by 920 to 950 resistance, but at least let's see another period of price discovery up into that area. So that concludes today's Strategy of the Day webinar. I hope you guys all enjoyed it, and do join me every Thursday at 2 p.m. Central, where I host that Strategy of the Week webinar. You can sign up for our daily newsletter as well, or get in contact with me over here at Zaner at 312-277-0110. Find me on Twitter, Facebook, or shoot me an email at dhussey@zaner.com. Leave your likes and your comments in the section below. And with that being said, we'll be back with you as price action develops. Take care, everyone.
You want me to share that on the Zaner Twitter, Dan?